Thank you, Mr. Chairman. It's good to be sitting beside you. Because our financial institutions can transfer assets around the globe in the blink of an eye, they can effectively choose which country regulates many of their riskiest transactions. That means that regulators around the world must be vigilant and must coordinate their efforts in overseeing the world's largest financial institutions. The Financial Stability Board is the main forum for that kind of coordination, which makes its work critical in preventing another financial crisis. Now, while the FSB is not legally binding on the U.S., its decisions are not, those decisions can certainly influence our domestic policies, and that's why it's important that the FSB have the same kind of transparent, data-driven decision-making that we ask of our own regulators. For example, here in the U.S., a company may be designated by FSOC as systemically important, but the designation can be reversed if the company restructures its operations so that it creates less risk. That means there are now two ways to manage risks posed by a big bank. The bank can change its business model to produce less risk, or it can face the stricter regulations and greater oversight. The bank decides which is less costly, and the result we get is what we want, and that is less risk. Now, Governor Kempthorne, as you've noted, many of your members have been designated systemically important by the international FSB. Are you aware of any process that the FSB has for allowing those companies to reverse their designation by changing their business activities?
Senator Warren, thanks for the question. I am not aware of any FSB off-ramp to get the G size out of there. It would have been extremely helpful if they would have announced what were the elements that caused them to be named G size in the first place. And also, was there an opportunity to correct that, as you're alluding to, before they were designated?
Okay, so actually, let me just break this down. So the answer to the question, was there any process for reversing the designation? You're not aware of any process for reversing it. I do want to talk about whether or not companies were informed about what the criteria would be. Does the FSB provide designated companies with the information they need to understand why they were designated and how they could potentially change their business activities to pose less risk?
Senator Warren, based on the input I have received from those companies, the answer is no.
All right. Would you support changing the FSB process so that designated companies would have a chance to change their operations and possibly reverse their designation?
Senator, yes, because we must have greater transparency. We must have greater communication. And again, before a designation, why not identify what is the risk? And then a company may determine it could take its own actions to remove the risk, or it could change its operation, or you could ask the primary regulators, would you please deal with this issue?
Mr. Stevens, would you agree with that? Would you support such a proposal?
I'm trying to puzzle out, Senator, how it actually work in the methodologies that have been proposed with respect to mutual funds. The methodology basically is based solely on size. What the FSB has proposed is if you're a mutual fund with $100 billion in assets under management, you will be automatically within a materiality threshold recommended for consideration. So to change the business model, I suppose you would either have to split the fund in half, and now the manager's got two $50 billion mutual funds. Maybe that makes it less risky. I think what it does is says that the original materiality threshold is nonsensical.
So I take it, though, Mr. Stevens, what you're concerned about is you believe, although I'm not sure if it's posted, but you believe that in an area, there is an area where FSB says size is all that's ever going to matter to us. We don't care what your practices are. But I take it there are also many that are pulled into designation because of their specific business practices, some combination of the risks they present because of size and because of the activities they engage in. This is what I understood Governor Kempthorne to be talking about, that there's no information right now about what it is that causes this designation and no off-ramp for the companies that are willing to adjust. So my question is, does it make sense to at least ask the FSB for more clarity around what it is that causes someone to be so designated and to provide off-ramps if there are multiple factors that are involved?
I certainly would never argue against more clarity. In fact, We've even asked for them to justify the materiality thresholds that they have put into their methodologies. And, Senator, they are nothing more than just numbers picked out of the air.
Mr. Scalia?
Thank you, Senator. I think it's a very important question you've asked. One other point that I would make is that if FSB were to make that change, it's not clear at this time what difference that would make for companies that have already been designated by FSOC, because it's FSOC that has designated them and the Fed that will regulate them. What we're told is that FSOC is not influenced by FSB decisions, but an FSB undesignation would only matter to an FSOC designated company if, lo and behold, FSOC were influenced by FSB. So I think it's a very important question, but it's only getting at one part of the problem the companies face.
I appreciate that point, although at least we have with FSOC, we've had the testimony here that there are off-ramps. There are possibilities for coming out from underneath an FSOC designation. And so what we're looking for is, can we get the same kind of thing over at FSB? And I take it you would support that sort of a change in the approach that FSB uses.
Yes, I think it would be a valuable step forward if FSB considered the sort of changes that the chairman's bill would make in the FSOC process.
Well, so this is Governor Kempthorne. I think you wanted. I'm sorry, Mr. Chairman. I think we're running over.
Sir Warren, thanks very much for the line of questioning. And just a clarification, there currently is not an FSOC off-ramp from designation. There is language that is proposed in Senator Shelby's bill that would provide that off-ramp.
I think we have had testimony, though, from those on the FSOC saying that adjustment is possible so that if risk is reduced, then FSOC designation changes, which sounds to me an awful lot like an off-ramp.
Again, Senator Warren, based on the input I have received from the member companies that have been so designated, I don't believe they know what would be elements necessary to be de-designated.
All right, fair enough on the transparency point, and one we've certainly had this conversation, I think, with those who've testified before us, but they have indicated there are ways to change FSOC designation and that it's important to review how much risk is posed. You know, I just want to make the point, as I see it, and we have heard the testimony repeatedly in front of this committee, that once a company is designated as systemically important here in the U.S., the company should have a chance to reverse that designation if it can show that it no longer poses a systemic risk. The U.S., according to those who've testified in front of us, say that we now permit this, and I believe the FSB should do so as well. It seems to me that's fully consistent with the FSB's important mission of making global financial markets safer. Thank you, Mr. Chairman. Sorry to run over.
Senator Warren, I believe Mr. Wallison had a comment.
Yeah.
I just have a small point here, but the problem is that we don't understand the metrics that either the FSOC or the FSB uses to designate a company as a SIFI. And we could avoid a lot of problems, including the need for an off-ramp, if it were clear to companies before they were designated what they could do to keep from being designated. That's not available to anyone, but it is in the chairman's bill and makes a certain amount of sense. We reduce a lot of the legal costs and other problems that companies have if they are condemned to be SIFIs and regulated by the Fed.
Well, as I said earlier, I think it is important that there be transparency about what it is that causes an FSOC designation, and it's important that the company have the alternative of choosing to reduce its own risk so that it has an exit ramp from FSOC designation. So thank you very much, Mr. Chairman.
Thank you.